Good morning, Vietnam.
Yeah.
Nice.
I am Meyer Dalal.
Jason Mantione.
Alan Hastings.
Welcome to the Money Matrix podcast, where smart money finds
A smarter way.
a smarter way.
Love it.
The smartest way.
Obviously, that's what we try to bring is value to our listeners, value to our customers, where we see the money moving and where we see opportunities. With the $150 billion investment increase that this bill provides, which is completely unexpected. Everyone thought, okay, we're going to take a little away from that and spend other places. It was actually the opposite. Congress passed the largest defense investment package since when? Do you guys have any idea?
World War II?
World War II.
That's crazy.
It's been that long since we've actually increased to such a significant degree.
Wow.
Well, not even 2001?
No.
That's crazy.
$150 billion is going in, and it's going to be broken down into real specific markets, which is amazing for us because we can really hyper-focus on what we're looking at. The most important thing is everyone really didn't expect Congress to do this. So when Congress came out and passed this $150 billion bill that it hasn't been since World War II, we have three specific areas and three specific things. $33.7 billion went for shipbuilding, $24.7 went for missile defense, and you have $20.4 billion for ammunition. Now, this money is going to four specific markets, and it's creating thousands of high-paying jobs. And right now, if you're an investor and you're looking for opportunity, it's coming to you right now. So, Alan, what are we looking at?
Let me break down what really happens. The big, beautiful bill was passed by the House at the end of May. It's got to still get through the Senate. A couple of people think there's going to be changes. A couple of people think there won't be. However, most of the discussion revolves around healthcare and different tax portions of the bill. The side that doesn't see much argument, at least not much kickback, is the side for the defense investment. And that's going to look to be, hopefully, whatever the bill turns out and shakes out to be like, this defense investment looks like it's here to stay. And that money is unique in that the money for this defense investment is available immediately to the government.
Yeah.
It's not spread out over.
It's never been that way. Here you go right now.
Yes. And so that's the largest cash infusion to defense ever, like you're saying, since World War II. And it's all going to be flooding the market at once, at one time. So the points you made earlier about where the money is going is critical. The largest investments are for that shipbuilding, the Golden Dome missile defense system that Trump is planning to set up over the U.S., and the ammunitions you were talking about.
Is that Golden Dome going to be like Israel's Iron Dome type of thing that they have, or is that, yes, similar, no similar?
The idea is that Israel's small, about the size of New Jersey, right? So it's easy for a dome. But for the U.S., it would have to be focused on specific locations. You can't have a missile defense system for the whole country. It's most likely going to be larger population centers or wherever the president decides is most important.
D.C., New York.
But because those three investments are the shipbuilding, the Golden Dome, and the ammunitions, because those are very specific and the dollar amounts are already listed for us, we can predict which markets are going to be involved the most in receiving those funds. And by receiving those funds, I don't mean that they're handing out cash. I mean, they're going to need to create these things somewhere. So we're thinking about high-paying manufacturing jobs, skilled workers, housing supply in areas where these things have to take place. And you'll see what I mean by that later. And then you also have to consider that defense jobs like this are recession resistant. And we're going into a lot of people thinking a recession or at least some kind of downturn. These are the kinds of jobs that are not going to be affected by the market movement. These are government jobs that have been contracted and paid for.
So Doge is not going to affect them.
No.
Already.
Hard to tell. Elon got doged.
The first market that we've identified with the biggest upside is in shipbuilding, and that's Newport News, Virginia, and Hampton Roads. Those are by far the biggest opportunities we're seeing. According to the Virginian Pilot recent reporting, Huntington Ingalls Industries, I'm just going to call them HII, it's just easier. They're the largest military shipbuilding company in the United States. And they right now employ 26,000 workers, making it the largest industrial employer in Virginia. Their current revenues are about $5.8 billion. And they're looking to build aircraft carriers and submarines. So with this infusion, we're looking at a huge influx of new jobs coming into these two areas because that's really right where they're located. According to Rocket Homes, since February of 2025, market report shows that the median home price hit $332,350. It was up 22% from the previous months. Rent.com data showed that the average apartment rent ranges from $1,292 to $1,470 for a one-bedroom unit. And Rent Cafe shows that 52% of the households are renter occupied versus 48% that are owner occupied. So there's a big rental demand over there. As they're hiring more, there's going to be a demand imbalance. With strong workers coming in on the areas to look at, obviously those cities, but specifically 10 to 15 mile radius from the shipyard. And typical homes that we want to look for is 3 to 4 bedrooms. And if it's available to multifamily, 2 to 4 units. That's where we want to be. That's what it is. And I think that's where you're seeing the biggest lift in terms of actual bang for your buck, because that's where most of the money's being spent.
Wow.
So what do you got for us?
All right. So I'm coming with beautiful Bama, Huntsville in Alabama. Talking about the dome. This is going to be the Golden Dome headquarters. You got a little under $25 billion in missile defense investment flowing into this area. We also have the center of testing, fielding activity, and integration in the Huntsville office coming out of the Missile Defense Agency. That's going to be the official site. Also, some demographics about the area. In 2020 census, there was 215,000, little over 215,000 residents. Now, that was in 2020 versus in 2010, you're talking about a 20% increase from 2010 to 2020. That's a lot of people.
But now they're saying 1.2 million people live there.
Yes,
Recent numbers. So you see the huge jump.
It's insane. Also, you got the data indicating that more than 1.2 million people reside in the Huntsville metro area right now. And then you're talking about the Space Command relocation could bring another 1,600 jobs. So that's a lot of jobs. That's a lot of people.
That's
Redfins.
a huge influx of people. I don't even think we've had that much growth in Florida, specifically in an area like that. That's crazy.
Bottom line, what we've been talking about these past few days is there's a lot of people moving around the country, within the country. I think
so what are the house prices?
Redfin's market analysis shows that the house price over there, median house price, is about $323,000, which is 24% below the national average. High-tech aerospace, right? High-tech aerospace jobs driving the increasing housing demand there. You need to have the need for modern housing to accommodate the tech workers. And these tech workers typically prefer newer construction. So what does that tell us? They're going to be clearing land and building new construction homes.
So then for an investment focus, what are you looking at? Obviously modern families.
Single family homes, townhomes, condos, and short-term rentals for contractors.
Because they're what are going to be like contracts, 6 months, 8 months type of jobs that they're because of their specialty.
Yeah, because of their specialty, they're not going to be there year round, which is great from the investment perspective of buying properties and being able to rent them out.
Yeah, they're going to pick up more money because it's a short-term rental than a long-term.
Great cash flow for our investment.
Alan, what do you got for us?
So in a very similar vein to your original city, I've got Bath in Maine, which is the Center for Bath Iron Works, a shipyard, where they're being contracted to create destroyers. This is kind of a smaller town. The median sale price for homes there is only $342,000. It's so interesting.
I had no idea anything happens in Maine. Legit. I had no idea.
That town has 8,000 employees. Would you like to guess how many are employed by the shipyard?
6,000.
Exactly 6,000
no
people
way,
out
really?
of 8,000. On the dot, 6,000 out of 8,000. I don't know if you're actually guessing or you.
I just figured if anything happens to them, the town goes out of business.
That's it.
Well, that's the thing is they're stable. Like they are now stable for the foreseeable future. If anything, they're going to be moving more people there. And it's one of those markets where if you think about the things that Jason was saying and that you were saying earlier, is this a place where you think property values are going to appreciate, or is this a place where people are going to come in on 3 to 5 year contracts and then make a ton of money working on these government contracts and then invest in other places? I believe that this would be a great rental market. Like you were saying previously, I see 50, 60, 70% of these properties as rented. People aren't going to be buying here. So if you're getting in now before the employees move in, you can collect on insane rent values for the next 3 to 5 years, almost guaranteed.
Wow, this is a great place to invest.
It's interesting. I never thought, what percentage of that is 6,000, 8,000? It's close to 7.
It's 3/4. It's literally 75% of the entire town.
So with all the now you're buying these houses in the mid 300s. From an investment perspective, you're buying this house, you're renting it out, you're making money, you're paying the house off. Now that all these people have moved there, and you have all this money being poured into these areas, and these big companies like the shipyards paying the bulk of the tax, these houses are going to jump in price in the next 3 to 4 years when these contracts are up.
What's very interesting is they're not in any very expensive markets. I can't imagine property taxes being high, nor the homeowners insurance, where places like California, Florida are getting killed by property taxes and homeowners insurance. I don't foresee it to be that much. So really, you're going to cash flow and your debt service is going to be good on this. While he pulls that up, the fourth place where we're seeing big cash flow potential, and that's in Mississippi. I can't even pronounce it as Pascagoula, but the HII has also shipbuilding and employs 11,500 workers there as well. They have 800 acres, so they're definitely involved heavily in that area. And, what's interesting is the rental income there is so crazy because the median home price is only about $144,000, up 6.1% year over year. The average apartment rent is about $750, which is 52% lower than the median average of $1,500. And most importantly, the people that are averagely looking to pay, they'll pay more because they're looking for easy housing, affordable. And even if you're paying $1,000, these guys are making $70,000, $80,000, $100,000 a year. It's nothing. And you can pick up and debt service on a property like this. What are the property taxes? Were you able to find that out?
Maine is actually, Bath is the highest. It's well above national average at 1.69%.
Wow.
However, Virginia is well under the national average at 0.77%. And Alabama in Huntsville, you're looking at a 0.56%, which is ridiculously low, like half the national average.
Alabama is what, 300,000. You're looking at a little over $1,500 for the year. Even in Maryland is 1.6. It's about $5,000 for the year, which is nothing comparatively speaking.
Could be Texas.
Yeah, it could be Texas at 2.4%.
And Alabama is going to get a big chunk of that money. Alabama is very appealing. Very appealing.
What's crazy is $150 billion is going to exactly 4 markets. Newport News, Virginia gets $33 billion for shipbuilding, 26,000 workers, and building aviation carriers. Huntsville, Alabama gets $25 billion for missile defense. That's the new Silicon Valley of defense with 20% population growth. Bath, Maine gets destroyer contracts, 6,700 shipyard workers, and a town of 8,800 people where homes sell in 6 days. Pascagoula, Mississippi gets destroyer and amphibious ship contracts, 11,500 workers with an average of $751 in average rent and $144,000 median home price. These are not random investments. These are definitely gonna explode.
Yeah. 144,000, is that what you just said?
Yeah.
Wow.
So for those of you who don't know, debt services, we're qualifying the rental income against the mortgage payment.
144,000 purchase price.
25% down.
Correct. And we're gonna do
the taxes.
And explain what your mortgage payment is. You include.
In this case, we're just going to do the interest only because as an investor, we look for the highest cash flow. And we know in the next couple of years, the rates are going to come down anyways. Right now, we're just going to get in get as much cash flow as we can, and then we can refinance into a much lower rate when rates do come down in 2 to 3 years.
Your payment is with your taxes, your insurance,
Correct.
and
Everything,
so that's all in.
What would be a
So-
payment beyond that?
Just interest, only interest, not including the taxes and insurance, is under $1,000 a month.
Yeah.
144,000.
Yeah.
And what was the rental number that you gave? 3,000?
No, not 3,000. I wish. So they're saying the average.
Me as well.
The average is they're saying 750, but the reality is more like $1,100-$1,200. That's what people are paying, and especially for a 3-bedroom house,
Yes.
you're going to pay at least $1,400 a month rent.
Yeah.
I would imagine a
Yep.
3-bedroom, 2-bath house, because that was 751 is based on a 1-bedroom apartment.
And
Ah,
the interest
okay.
only payment on that's around $720.
So what, you're looking at $1,000 a month payment.
And taking home $1,200 to $1,400 on that
So,
rent.
so you're picking up anywhere between 20 to 40% on your payment.
Wow. Wow.
Now let's
Insane.
just do the numbers. If people want to get specific numbers on different areas, we can do that as
I
well.
think we could do a podcast with specific areas, housing, what it's going to cost, what you can get in. We could break it down for them.
We should look at that, Jamie.
Me.
And I'd like that.
All right, let's
So-
move on.
Yeah, I want to talk about the investment strategies for these markets. You have to think about what's coming into the market, right? These are specific employees. These are defense workers. And what that means is they're going to have stable, long-term employment. They're most likely going to be bringing families and needing to live near schools. They're going to be reliable. These are people on government contracts. So as a landlord, you don't have to worry about missed payments. You don't have to worry about job insecurity. And they're also going to want modern amenities, but it doesn't have to be luxury. So the income for these people is most likely going to be higher than local median wages. They're going to have a lot of overtime opportunities, excellent benefits. The employment is going to be recession resistant. So you're not going to be looking at joblessness in 2-3 years. For a defense worker, what you have to think about is, am I going to focus on my cash flow or am I going to focus on the appreciation? And the differences in these markets, I think Maine, for instance, Bath, is going to be a cash flow market. The lower entry costs, the higher yields, and the general area in itself are going to allow you to get higher cap rates. You're going to have some appreciation potential for sure, but these are people who are going to be coming to rent. And there's
Yeah.
not going to be other competition.
Mississippi and Maine, I think that's ideal for that cash flow.
Correct them.
And I think for appreciation, Virginia and Alabama are going to be your 2 appreciation plays. They're the more higher end markets. You're seeing higher price points to
Yep.
begin with in the 300s, but you're also getting higher rents and higher everything. The average 1-bedroom is renting between $1,200 to $1,400.
Yeah.
So imagine at a home where you'll get, so that's where you'll get some cash flow, but it's not going to be huge at this point. But if you're an appreciation market, you're out of pocket on a $300,000 home is probably $75,000, somewhere around there. And if your home goes up, what they're expecting anywhere between 20 to 25%, you're making that up and then some.
So I guess the $1 million question is, why act now? So obviously we know that the defense confirmed the House passed the $150 billion bill. The money is appropriated and ready for immediate deployment, which is huge. Alan mentioned that. The housing supply hasn't caught up with the anticipated job growth. Virginia Business reports Northern Virginia inventory remains at just a little under 2 months supply, which is severely constrained. The News Center of Maine analysis shows that the housing crisis is driven by a low supply and too few of homes being built over the past 10 years. Basically, we're telling everybody that the investment window is 6 to 12 months before the broader market recognizes this whole situation.
I don't know if I'd give it 12. I don't think I would.
Yeah, I think
I would
it's
say
going to be
6.
sooner.
Yeah, I agree.
Here's something very interesting about your Maine property. Everyone in Bath, Maine, the population is 8,800. The actual number of Bath Ironworks that employs is 6,700 people.
3/4. Yep.
6,700 people. 3 out of every 4 work for the Navy destroyers, each making between 50 to 70,000 a year. There's nowhere to live, and they're commuting an hour each way because there's no housing. All the
Crazy.
3-bedroom houses are about 305,000, where it would be at least 800,000 in Boston. Homes sell on average of 6 days.
Wow.
If you go in and you position yourself with no loan contingencies and act as a cash offer, and come in strong, you're getting a home.
Yeah.
You're clearly getting in there. There's opportunity to get in there, and it's just a matter of taking it
Now,
now.
there's no waiting on this.
Yeah, I think your next step is how do you execute, right? How do you
Mhm.
manage your risk? How do you get in there? Like you're saying, go in pre-approved, right? You have to do your due diligence. First things first, you've identified these markets. You have to create a timeline. You have to think, am I doing short-term, long-term? Am I, like I said, cash flow? Is this appreciation? Think about the type of people moving there. How am I going to position myself with school districts? How am I going to position in the local housing supply for, like you're saying, people who are driving an hour to and from work? Where am I going to get a house that is the most accessible? Then once you've done your market research, you really got to dig into the financial analysis. Rental rates versus purchase prices, all these markets are slam dunks. You can guarantee the green, it's going to be fine.
Mhm.
Where are you going to make the most bang for your buck? Property tax implications, Bath had the highest, but also I think Bath is the best for cash flow. So you really have to think, where in this math equation do I fit? Insurance costs for the coastal areas with these shipyards is going to be slightly higher. That's just the way that it is, but you're not going to be breaking the bank over that either. And you have to then consider the risk. There's political risks, right? What if 4 or 5 years down the line, presidency changes, then defense spending gets cut? So these are the kinds of things where longer term, Bath may not be as stable as Virginia, where you have a much larger population. However, that entire town is built around one company. So you really have to consider what type of play you're making and what the market looks like.
Yeah, no, I agree. And the one thing about this job market, these jobs, it's very cut and dry. You cannot do this job from home. These jobs
Right.
have to be done on site.
Yeah.
These submarines need to be built in a shipyard by people like you and me.
Yeah, they
So-
can't go remote.
No, there's no remote for this kind of work here. That's for sure.
People can't just be like, get poached and be like, oh, come work over here, because it's really not like that.
No, it's not.
A whole town works for one company.
That's crazy. I don't think I've ever heard of that, unless I watch one of those old movies where everybody works at the mill,
Yeah.
and then the mill's going to close down, and what are we going to do? But yeah, I never heard anything like that. The one thing about this is that this is a job market that is recession proof. The money is there. It's available right now. This is what we're going to build. It's going to take this long to build it. This is recession proof. So no matter what happens, this stuff's getting done. It's not like the company's going to go out of business or they're going to stop building this and do something else. No, this is recession proof. So when everyone is worried about remote work and killing office buildings, contractors are building the ultimate recession restraint rental portfolio. Talk to the workers who have to show up for work.
That's the key.
Simple.
Right there.
Yep.
So the key takeaways we have for Newport News, Virginia, Huntsville, Alabama,
Yep.
Bath, Maine, and Pascagoula, Mississippi.
Yep.
Our timeline, we're saying 6 months.
6 months now.
Strategy, focus on single-family home rentals, targeting defense workers. Newport News and Alabama, price appreciation, a little bit of cash flow. Bath and Pascagoula, Mississippi, heavy cash flow. Appreciation is going to be gradual. Safe to say?
Absolutely.
I think we gave good information. If you guys want more information, please contact us. You can reach us at WWII on Instagram, and we're here for you.
Absolutely.
Thank you so much. Money Matrix Podcast. Thank you.
Thank you.
Thank you.
Nothing can stop me. I'm all